All right, good morning and happy Monday, everyone. Give me a quick sound check here in the Essentials and on the YouTubes. Hey, good morning, Debbie. Good morning, Mirza. Good morning, Miss Lorna. Lorna, you enjoy some football this weekend? Few good games there. Some good stuff. But all right, folks, good morning. Happy Monday, as always. Hope you had a great weekend. And the story of the morning here, um, let me go grab Camtasia real quick. Record the screen. But yeah, the story of the morning is Apple getting hit with the ugly stick here. Gonna gap down to about 217-ish. All right, here's Camtasia. And I think on an analyst downgrade, that's a rumor I heard, but nonetheless, it's a gap down in a really big name. I think a really big piece of the puzzle, especially for the QQQ, which, as we know, made a lot of progress last week. Watch Apple down here at these recent lows. It's a pretty interesting combination where they gap it down to about 217. In the event they blow it through last week's lows, right down through 216-ish, down to 215, Apple's got a lot of squeezes, a lot of energy getting built up. 3-day squeeze, a 2-day squeeze, a daily, a 4-hour, a 2-hour, even a little 5-minute. So a gap down that takes out key support could see the 2-hour squeeze fire to the downside. Then comes the 4-hour, then comes a daily squeeze, etc., etc. Where if you're bullish on Apple, and I would like to be bullish on Apple, we're looking for 1 or 2 closes back above the 21 EMA. And you're taking the 2-hour, 4-hour daily squeeze, trying to call for a push towards that 230 call wall. I think in the short term, at least, the gap down does spoil a little bit of that fun. But again, big, heavily weighted name. Definitely keep an eye on that there. Big support. Despite that, the futures, not too bad. S&Ps are flat. The RUT is up a quarter. And the NQ only down about a half. You get a major component down 2.5%, 3%. And the NQ is only down about a half. Could be a lot worse. But let me show you all the sheet here. And for the bulls, it's one of the better looking sheets we've had maybe in a month or longer. Every index gets a positive score. S&P is a 52 out of 60, the QQQ a 37. With the exception of energy, every sector gets a positive score. The SMH upgrades to a 29, the XLK upgrades to a 39. You've got gold, real estate, etc. And then the big 14. My major watch list. If it weren't for JP Morgan, everybody's got a positive score. Netflix a 56, Broadcom a 48, Amazon a 46. Right, and I think a lot of that got started on what I think was a nice bear trap that they set back there on Wednesday morning. Big flush down to the 5,400. You had a few big things lining up there at 54. You had the low from the previous week. You had the weekly 21 EMA. And you had the spot gamma put wall. And sure enough, Wednesday morning, the action feels really bearish. They don't take out the key level. So everybody gets short into the flush, and then they go ahead and squeeze them. The key from here, and keep in mind, we got the Fed on Wednesday, so room for a little volatility. I think the key from here, how can the market handle a little pullback? And if anything, I would anchor to your 1-hour time frame. Right? They flush it, they trap all the shorts, they squeeze the shorts. The short squeeze gives us the first 1-hour buy signal since mid-end of August. That's all pretty promising. How can they handle the back test? First pullback to an hourly 21, and we're taking out support. Momentum shifts negative. They cancel the buy signal. I don't think the action you're looking for continuation higher. The first back test holds up like a champ. They keep it above the hourly 21. They keep momentum above 0. They keep on cranking out the buy signal. I think, one, we learn a little bit more about the market, and then two, could make for a nice buying opportunity. Little bigger picture, if they can keep the progress they've made and then build on the progress they've made, we do have the 3-day squeeze setting up here. We got the slingshot signal, really good structure. Right, the foundation of the chart supports a move higher. Really good trend. Right, 21 above the 50, 21 trending higher. Only missing piece here is momentum. Energy building up in the squeeze. Good trend, good structure. If they can take our MACD back above 0, then they've got the full enchilada. Building energy, trend, structure, and momentum say, let's go for a push higher. Not to say it has to fire to the upside, but I think that'll be a bigger part of the theme for the next 4 to 8 weeks. They trap the shorts, they squeeze the shorts. They've made progress. Can they keep it? If they keep it, can they build on it? If they do that, all the way here in the background, could be a big time move out of that 3-day squeeze. But again, I think you're going to learn a lot more on that first decent back test. And then the cues. Right, flush it, trap the shorts, and they make good progress. Back above the daily 21, back above the daily 50. They have canceled the sell signal, trying to get that fresh momentum cross. And then down here on the 1-hour time frame, the short squeeze gives us the first 1-hour buy signal since all the way back here mid-August. Now, what happened back there mid-August? I think, if anything, it all looks a little similar. They flush it. They trap some shorts. They squeeze the market. The squeeze gives you a fresh 1-hour buy signal. From there, how does the market handle a back test? Well, I don't think they handled it too good. Short squeeze, buy signal. And then the first back test of that 21 EMA, everything just kind of falls apart. Takes out the 21, takes out the 50. You've got momentum back below 0. You lose your buy signal. None of that points towards, go ahead and buy that dip. Look for a push higher. Maybe this time is different. If it is different, then I think you've got a different market to work with. And perhaps we're going to get that flush, this week with the Fed. But major things to watch there. And then for the stocks, number one on the board, and I think by far the best setup, has got to be Netflix. Now, if JP comes out on Wednesday and for whatever reason he's feeling frisky and he just hammers the market lower, then I don't think Netflix can work. Gonna need a good market behind it. But check this bad boy out. If anything works this week, for big tech, the big 14, this is number one for me. We got the white dot on the daily squeeze. A+ setup. And then another A+ setup here on the 4-hour. Now, the key for Netflix, again, along with needing a good market behind it, they've got to get it through that call wall at $700. And my thinking is this time around, they've probably got their best chance. Where think back here to early June, right, they had a great looking daily squeeze all the way back here at 640. Meaning by the time the squeeze fires, by the time price is trying to get towards and through that 700, it had already kind of released all the energy. It builds it up, releases it, and then by the time it gets towards that call wall, maybe a little tuckered out, maybe running out of steam. Then you've got your second attempt. And for the most part, that was just a crazy short squeeze move off the bottom. Right. from 580 all the way up to 700. Again, I think by the time Netflix gets there, it's a little bit tired. Now we find ourselves right under the brick wall, but we have the benefit of that daily and that 4-hour squeeze. Meaning we're at the key level where the last few attempts, I think Netflix is losing steam. Running out of energy by the time you get there. This time around, we're building all the energy. 4-hour squeeze fires and the daily squeeze fires through that 700. I think pretty quickly Netflix heads towards 725 to 730. The key for the entry would be a good official close above 700. That's one thing they haven't even gotten yet. Best close they got was 701.86. If they can make it a little more convincing than that, I think the 720, 725 calls could be a great play. So that is my favorite setup. We don't have any just yet, but might be getting some today. And then let's go take a look at Tesla. Tesla's got a call wall at 230. And they pop it into it back here, or a little push back here. And they try again, they try again, they try again a few more times. One or two closes above that, might be room for a push towards 240, maybe into 250. The nature of Tesla is when it takes out a key level, you tend to get these quick, fast and furious kind of moves. I don't think you get that until you take out that 230. In comparison to Netflix, I think Netflix is a superior setup. Scoreboard gives Tesla a 5, and it gives Netflix a 12. Every day of the week, I want to try to buy the 12 before I go buy the 5. But we'll keep an eye on Tesla at the 230 call wall. And then the other one I would watch here would be Meta. And the key here for Meta will be momentum crosses. Plenty of squeezes, good structure, good trend. To get that daily, 3-day, weekly squeeze going, got to get that MACD back above 0. Slingshot on the daily squeeze. And I think the current weekly squeeze is a pretty good example. We get the first blue arrow. It's our first heads up. We don't go buy Meta. What we do is sit back, see if they can get that momentum cross. If they get it, then that turns into an A+ setup. They do that, then we go try to fight for a good entry. Try to get the cross. They try to get that momentum cross. They never get it. Meta just pulls back. They try again early August. Trying to pull it higher, trying to pull it higher. They never get it through 0. And again, Meta comes back in towards support. On the third attempt, they actually pulled it through 0. Squeeze could take Meta towards $600. So for me, the entry would be the white dot here on the daily squeeze. Shift momentum, get the buy signal, get the white dot. Then I think we got a nice playable daily squeeze. So keep an eye on Meta. If I'm going to wake up and buy anything this morning, it would be Netflix over Meta. But I also think Meta's a few shifts away from what could be a pretty big setup. Keep an eye on Tesla at 230. And what I would love to get is a nice move above 230. And then try to jump in on a good-looking 5-minute, 15-minute, 30-minute squeeze. That'd be right up my alley. Look for a break and a move above that 700 on Netflix. If they can do that with a good market behind it this week, I think it's quickly into 720, 725-ish. If anything could spoil all the fun, aside from Powell, it would be more weakness over there in the Big Apple. So 216-ish. Not just for the sake of Apple, but I think for the sake of the greater good of the market. pretty big spot you'd like to see it hold at. Takes out 216, fires a 2-hour squeeze short, fires a 4-hour squeeze short. That can make Netflix's job of breaking out above 700 a little bit more difficult. So all things to keep an eye on. And then my biggest piece of advice, just be mindful of your risk into the Fed. It's a self-inflicted pain kind of thing. If the market opens in 30 minutes and I put half of my account, half of every dollar to my name in Netflix calls, and then Powell comes out on Wednesday and boom, down goes the market, that's going to be incredibly painful. There might be a few tears shed, but it's also self-inflicted. Jerome Powell didn't kick down the door and make me put on half my account in Netflix calls. So I could blame him, but the blame's on me. If I put 2% of my account in some Netflix calls, and then Powell just crushes the market, not going to be fun, not my desired outcome, but I'm not taking too much unnecessary pain. So be mindful of your risk, make it a good week, and yeah, they've made progress. Can they keep the progress? Can they build upon it? We'll find out more here in a few days. But if you guys and gals got any questions, anything you want to take a look at, I have got you covered. I want to shout out a few of the traders in my room. My entire focus since, call it August 1st, has been S&P's QQQ and then these 14 names. In terms of what am I watching and what am I looking to trade, I haven't been watching XLP or the Costco's, etc. We're not looking at healthcare, energy. But kudos to a few of the traders in my room. They hit Home Depot, which, under the system is a beautiful daily squeeze. I think a few folks took that towards the 380 call wall, and then a few folks were hitting Procter & Gamble, going back a few weeks ago to that daily squeeze. So I love to see it. All right, S&P futures are quiet as a mouse. The chart looks a little funky on the gap up. You had the contract roll, I believe. NQ down just about 0.5%, which frankly could be a lot worse. Apple getting all kinds of feisty here. Hey, what's up, Miss Claudia? Yeah, Claudia, are you coming back around November-ish? We will be there, though. You know that. We're holding down the fort for you. Do I have a 2-day squeeze in the SPX? I have a 3-day squeeze. 3-day squeeze for the spiders. And then the Qs, I have a 2-day squeeze. So 2-day QQQ, 3-day SPX. 2-day squeeze for the Qs is a little neutral. Tony, when am I ready to pull the trigger on Netflix? So I would be ready to pull the trigger on Netflix on one of two things. Either an intraday move through that 700, meaning this morning, this afternoon, they're getting that move going, then I go ahead and jump in. Or I could opt to wait a little bit closer towards the end of the session. We're 15, 20 minutes off from the close. Netflix trades 705, 710. At that point, looking like we should get the close above that 700. Either which way, Tony, I would manage the trade pretty similar. Where my major thinking would be if they break it through 700, then I jump in and buy those calls. If they end up taking it right back under 700, I'm already going to consider cutting off the trade. Could, of course, be a bit more reasonable. Maybe give it some room down to that daily 21 EMA. And I think with the Fed coming up, I'd probably be looking out to next week's expiration as opposed to this week's. My initial thinking would be if the trade's going to work in the fashion and in the speed I want it to work, if they get it above 700, we shouldn't end up back below it. Now, can I buy calls for next week and at least give it until 677? Yeah, that might be appropriate on a really good setup. My preference is they break it through and they wave goodbye. We'll definitely keep an eye on it together. I won't be on the mic in the mastery this morning, but I'm gonna grab the laptop, get back in bed, and then I'll be keeping an eye on stuff for us. There's also the potential, whether it be a Netflix, whether it be something else, we might not get these bigger breakouts, directional moves until after the Fed. Might not be the case, but the potential is there. The pre-Fed chop, everybody's favorite. And yeah, BRB 206. That's a good point on Netflix. The implied volatility is not the lowest. And I think that should also factor into the management of the trade. If the IV is a little bit pumped up, and I'm going to go buy the 720 call, best case scenario, they take it to 720 that day or the following day. Otherwise, they take 3, 4, 5, 10 days. I'm just getting crushed there on that theta. So to me, mentally, it's very much, they get it above 700. They go on ahead and immediately get the job done. Or maybe I want nothing to do with it. All looks promising back here. All look promising back here, back here. Ultimately, a big fat nothing for you. And then any thoughts on silver? Yeah, silver had a nice move last week with gold. All right, let me check the weekly squeeze. So we got the slingshot signal on the weekly, which means that they can get MACD back above zero. Then the odds favor they want to fire that weekly squeeze towards the upside, which can kick off a move towards 30 to 31 bucks. So that looks loaded with potential. And then we got the slingshot on the 3-day squeeze. They hook momentum. Should give it a little oomph there. And then it's also got a 2-day squeeze. I like it. If they can get momentum in the favor of the bulls, a little bit like back here. Now, to the benefit of the bulls, trend, structure, etc., I think this time around is about 10 times better. But point being, you've got a weekly squeeze setting up back here. MACD goes back above zero. Kicks off a nice move to the upside. Now you've got a weekly squeeze with, I think, better structure. They get momentum, could lead to a bigger move than the one you had back there. So I think that looks pretty solid. In the shorter term, there could also be room for a bit of a dip. I even think a move back down towards 27 doesn't really change too much about that weekly squeeze. And then Alejandro, good morning. UNH, Amgen, and AXP. I've got you covered. UNH. All right, so we got a few squeezes, a 2-hour, a 4-hour, and a daily squeeze. My first observation about the daily squeeze, good trend, good structure, but you're going into that daily squeeze on declining momentum and now negative momentum. Good trend, good structure, momentum going the wrong way. And a lot of times, momentum leads the pack, meaning first momentum crosses negative, then they go attack the structure. They take out a 21, they take out the 50. Where look at the opposite back here. You have bearish trend and bearish structure, but then they shift momentum positive. Squeeze reverses and fires to the upside. So for me to want to get bullish on UNH for more than a day trade, I'd have to wait for that confirmation from that. If they can take that, pull that back through zero, then I think for a swing trade, I've got a lot more wind at my back for a long. Four-hour chart's a bit of the same, right? You're in a 4-hour squeeze. Momentum for now is heading south. Now, that alone never guarantees, hey, that squeeze is it's gonna fire short and down to 565 it goes. Doesn't mean the squeeze has to fire short. Just means the odds don't quite favor it fires to the upside until they get that shift. And then Amgen, here's the opposite. Good looking 4-hour squeeze, momentum just crossed positive. Now the bulls got themselves a nice fresh tank of gas. They can go work with that. So I like that a lot. A+ on the 2-hour squeeze. But now bigger picture. Momentum's been lacking on the daily chart since early August. And they push it off the bottom. Little attempted a move going and right back down. They shift that, then they can go ahead and seal the deal. 4-hour chart looks awesome, though, so that one might be getting pretty close to a nice pop. And then AXP and AMD. AXP's pretty clean. Good trend, good structure. Little poke back above zero for momentum. They just keep on pulling that higher. You got wind at your back and a good-looking daily squeeze. And then I think the weekly pattern and the weekly squeeze are also really nice. All right, AMD will be the last one for the AM. So for AMD, when I compare an AMD to a Netflix, knowing Netflix might fall apart and AMD might be the one to work, what I get from Netflix is a lot more clarity. It's above all my key levels. I've got my signals. The trade might not work, but at the moment, the indicator screams, I only look to do one thing here. Where on AMD, it's a lot more neutral. Not as much clarity for the perfect long, not too much clarity for the perfect short. So what I do in that situation is I want to take bigger important levels from a daily time frame. I'm going to mark up the 50 SMA at 150, and then I'm going to mark up the 21 EMA around $1.45. If I'm bullish, those are two levels I'm going to anchor to. And what I mean by anchor to is I can look for a spot to buy some AMD above either of those levels. What would that look like for me? AMD holds above that 150. Then it prints a 5-minute, 15-minute squeeze. If I can get my buy trigger on that 15-minute, 5-minute squeeze, then I can above it above that 150. I have a level I can anchor to, and now I'm getting a trigger to take action. Pulls back a bit, chopping around 145-ish, 15-minute, 30-minute squeeze. That could be my next shot. But the importance, I think, of going down to a lower time frame there is that's where you can find a bit more clarity. Our daily chart with a score of 3. doesn't tell us too much. I'm not crazy bullish. I'm not crazy bearish. I'm still I'm still trying to figure it all out. My 15-minute chart might become the perfect 12 this morning, right? And that can offer a bit more clarity. But all right, folks, I'm going to let you go here. Quick rehash. Apple gapping down to, I think, a really important level. And again, not just for Apple, but I think for big tech, big semis, and all the above. A lot of energy getting built up. So a gap down and a break of support could potentially lead to a much bigger flush there. We got JP and the Fed on Wednesday, and the major thing I want to see, whether it be today, tomorrow, maybe next week, how can the market handle the first back test of an hourly 21 EMA? They hold support, they hold structure. Indicator keeps on printing the buy signal. I think signs of a market that in the short term wants to go higher. If they totally drop the ball, then we got ourselves a different discussion. But as always, folks, thank you for your time. I appreciate you being here. Again, reminder for those of you in my room, I will not be on the mic this morning. Got some stomach issues I'm dealing with, but I'm going to grab the laptop and I'll keep an eye on things. Find out if we get the entry in here in Netflix for today. If not today, potentially later in the week. But all right, y'all, thank you again. Go kick some butt, and I'll talk to you all on Wednesday.